Thank you, and I hope you will have your ways to check the communication aspect in terms of it being clear to our listeners. So welcome to all the analyst friends to this Q3FY18 call. Very good afternoon to all of you. I hope you would have had the presentation and all the input material, and we will do more of talking after we hear your questions. And I will perhaps in the end summarize our discussions and the way forward. So I'm not going to really talk about and give any opening remarks, and I will look forward to your questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from... Thanks. Please go ahead.
Hello, sir. I have a couple of questions, first on the result and then in general. So on the results, sir, in CGPL, if we see, then the operating profit has improved to 54 crores from 29 crore. So is it just because of the lower PLF, or is it also because of the efforts that we have in blending coal?
You could say primarily it is because of the lower PLF, because so that makes a significant difference, because you saw that the availability factor was higher, but yet the PLF was lower. So since the offtake is lower, naturally that has a positive impact.
Okay, because I wanted to understand if we can quantify any number on the benefit that we would get because of coal blending.
Also the improvement in what you said, the coal consumption factor, primarily because of the heat rate improvement, not as much as blending. But at the same time, the significant difference is on account of what you mentioned, which is the lower PLF with higher availability.
Okay, got it. Sir, on Maithon, why would the availability be lower this time around?
So the unit was on schedule outage. That is the normal factor in terms of availability being lower. But you would have certainly seen the impact due to the CRC order.
Yeah. So is there anything else, or it's just the CRC order and the lower availability?
Nothing else at all. In fact, the station continues to do very well. It's just the CRC order, which of course we're very confident we have to appeal, and some of the aspects that they had themselves permitted before and have turned around in this order will get corrected. We are more than confident about it.
And sir, on the outage led 19 crore of impact, do we expect this to recover in Q4?
The availability factor will automatically be higher than the statutory availability. So the entire fixed cost will be recovered. So if you are trying to hint in terms of fact whether the annual one will surpass that, it certainly will surpass it.
Okay, makes sense. Sir, and if you could help us understand the status on the Trombay PPA, the progress as such.
Ashish, at this stage, there is virtually no change compared to what was reported in the press, in the sense that MERC heard BST's petition in which they have sought 1-year extension on the existing terms and conditions, to which Tata Power as a respondent gave its confirmation in terms of the fact that we are okay with that. And now MERC has to decide. You might have recently also seen an order in respect of the other distribution company, which had also asked for tie-up of their needs from their respective plants, which MERC has approved for next 5 years on the same terms and conditions. So at least one factor that is now predictable, I would say, while we have to still get our order, in the sense that Tata Power distribution, therefore, to the extent that it wants to contract from Trombay, will get the same terms as has been given to the other DISCOMs.
Okay. Sir, and so then what happens after 31st March for to the quantity that we have that we give to BEST?
No, so to that extent, of course, for 1 year we are clear that BST will get from Trombay because they have not tied up. Now, whether that is for a month-on-month basis, whether that is on 6 months basis or 1 year basis, that is what MERC has to confirm. If MERC confirms for a year's time, then it becomes for 1 year. If they confirm for different time, then it becomes for different era. Because the choice that BST has is to go through the entire rigor of bid again. And you can imagine that period will take more than 6 to 8 months anyway.
Yeah. So thanks a lot. I'll come back in question queue for more questions.
No problem.
Thank you.
Thank you.
Thank you. The next question is from the line of Apurva B from ICICI Securities. Please go ahead.
Yeah, hi sir. Thanks for the...
Go ahead.
Sorry, we seem to have lost his line, so we'll move to the next question, which is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. Good afternoon. Good evening, sir. Sir, I have 3-4 questions, sir. First is on the one-off in numbers in this particular quarter. There is 2.7 or roughly 3 billion of deferred tax asset which have been created, and there is a marathon. Is there something else can you quantify all the one-offs?
So the one is you said about...
He said about deferred tax?
Deferred tax.
The other he said about the milestone, I guess.
Yeah, so milestone, deferred tax, and then, when you are comparing with last year we had also one-off items from gains from TATA Power of about 240 crores. Then we had, again, a regulatory order, 180 crores, and then we had made some one-off provision. So overall, last year we had a 355 crore kind of one-off, and this year we had 299. So basically, if you are looking for one-off, overall it's about 56 crores of lower one-off gains.
So there are two numbers floating. One is 297 crore, and there is marathon.
That is on DTA. That's the deferred tax.
Correct. Deferred tax asset, and there is one marathon of 97 crore.
Correct.
And but you have declared in the press release says 188 crore is the one-off.
So that's the net number. 188 is nothing but compared to last year in standalone. So you might have seen in the press release about the standalone difference, which between last year and this year, we had 188 crores more. That is, last year it was 115, this year it is 303. So it's 188 crore more. On the consolidated level, it is actually lower than last year by 56 crores, the one-off.
And my second question pertains to we are going through restructuring of the entire group entities. Is it possible to lay out the timeline for various things we are doing like Panatone, Tata Power Renewable, and the Tata Ceramic, Tata Projects? Is there a timeline which you can lay out?
But we'll let you know as and when we conclude those, because it will be unfair for us to double guess in terms of permissions and CPs and all that stuff.
So can we expect most of the item to happen by end of March 18, end of FY18?
It will be in everyone's interest to do it as fast as possible, having sort of put them on that tree. But at the same time, it will be unfair to hazard a guess.
And sir, has there been progress on the CGPL discussion with DISCOM? Is there something which you can share?
Again, I guess, Mohit, it is important for us to bear in mind that that's actually an initiative between lenders and procurers. So we don't get so much visibility. In fact, many times we too read in newspapers like the way you people will get to understand. So we have knowledge of the fact that there have been working group meetings between the procuring states and the lenders. But eventually what's transpiring, how fast and how well it's progressing, one is not very clear.
on which account there was under recovery in Marathon, in the sense on which accounts the regulator has disallowed some of the costs to be recognized?
Marathon?
Yeah.
So he'll give you those details.
You said
Which account he has allowed and which account he has not.
Oh, okay. So there are the disallowance is mainly in Capex. There is a cash flow effect because of that. Then there is the ash handling cost, sea trade,
and he has asked us to come back with during the
true-up exercise.
This is basically postponing the finalization of those accounts.
Yeah.
So Mohit, if you were familiar with the regulatory system
Understood.
in the previous ones, the regulators used to take the projections, build it as a part of the tariff, allow you to bill it, and then in the true-up he will see what is the actual versus what he had provided. But in the current dispensation, which is actually an intervening period in which the previous chairman retired and the new chairman had not joined, the new panel actually did not take into account any of those aspects and said they will not provide that in the tariff, and you come at the time of truing up. And that's the reason why you find that now we cannot bill, and so there is an impact of hereinafter that you can't bill for till such time that you go back on truing up or you get your appeal upheld, and also for the past period when we had been accounting for it, that also he has sort of annulled till we go back on truing up. So that's the reason why you see this impact.
Thank you, sir. Thanks for the opportunity.
Thank you.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
So thanks a lot for taking my question. So my first question is on the entire renewable portfolio. Now, as we look at the full year this year, as we complete, we'll be close to 500, north of 500 crores in terms of the PAT from this business. Can we expect any more kicker in form of further decline in interest rates, etc. here, which could further support PAT, or we should expect this to be steady state with a portfolio of close to 2,250 odd megawatt?
So apart from the new capacity additions, which keep happening depending on which projects get closure. For example, during this quarter we closed about 227 megawatt of solar projects. The kickers are, of course, on the financing side. The kickers keep coming on as the interest rate cycle changes and refinancing happens. The other issue is that when new projects happen in the initial few months, there is always under absorption of the fixed cost, like it has happened in this quarter also, that the projects got commissioned during the quarter, and when from the date of COD the fixed cost gets to kick in, but the generation doesn't pick up for a month or so. So that is the only big kicker. So basically capacity addition and stabilized capacity addition, that is really the kicker, and refinancing will keep happening. Can't predict that as a kicker all the time.
Sure, sir. And can you, sir, talk about, if you can discuss what is the total receivable that we would have in our renewable portfolio today?
We are close to 3 months on an average as a global, meaning full portfolio. Some states are still skewed, but otherwise it's average of around 3 months.
Understood, sir. And so last question from my side, as I look at the regulated asset at the Delhi distribution business, it had been declining for the last almost 4-5 quarters, but this quarter has seen a pretty significant jump. It's close to 4,500 crore. Any reason why that has happened?
No, I don't think so. Where is it?
We will just confirm it to you, perhaps due to the new...
No, my sense is it may be because of the billing by the generators. While the regulatory asset has declined, but when the billing comes in from the CRC for various NTPC projects, etc., at that time there is no sort of back-to-back passing on of that, and therefore the regulatory assets for an interim period increase. Otherwise, there's no such trend.
there's no built up basically.
Yeah, there is no build-up.
Okay, sir. That's it. Thank you.
Thank you. The next question is from the line of Dhruv Muchal from Motilal Oswal Securities. Please go ahead.
Yeah, thank you. So firstly, on the restructuring that we are undertaking, Tata Projects, Tata Ceramics and others, so most of these entities are not listed. So how should we look at the valuation? I mean, how do you plan to sell them? Panaton also. So even ICD. So how should one look at the valuation of these companies? How will you decide them?
So there is a laid down process for these valuations of unlisted, and goes through a rigorous fair valuation process, and audit committee has to get satisfied, and this is very standard. So there will be nothing, I would say nothing extraordinary in this. Like all unlisted companies where you have to have a fair valuation by independent valuers, this will also go through that.
So have we, do you have a number in terms of what are you looking at, in terms of what is Tata Power looking at it to realize from all these assets?
No, we can't, unfortunately, we can't give you that number, because unless the evaluations are approved by the board through the process, we can't publicly share it. You could always find out from your own sources as to what numbers they're generating and what are the industry benchmarks. Probably at this time, that's all we can say.
Sure. So one thing is also, second thing was on the Mundra asset. So again, the FOB cost of coal is significantly lower than what we are realizing in Indonesia. So the differential between Indonesia and what you are paying at in this Mundra is about $10, which is almost the highest quarterly levels. So how are we optimizing it? Do we have favorable hedges? So I mean, the cost is pretty low there. So what's helping us?
There is mix of low CV coals also is there. The mix of the entire coal mine quantity is at the mine level is different than the type of coal that Mundra buys.
The better way to understand from your perspective would be the fact. We have been declaring that we continue to source coal from places where we can get better than the market rate. And for each of the quarters, you will find at least 10 to 15% part of the portfolio of consumption that will be at rates far lower than the market rate. Because more than that, it's difficult at this stage for us to increase that portfolio, because what will happen is then in that case, we are dependent on too much of different quality of coal from blending point of view and storage point of view. But yes, you can always assume that 10 to 15% coal we will always be able to source, which is at lower value than the market price.
Sure. Because if you see last 2-3 quarters, the coal cost for us has increased by only about $1 or $2, versus internationally the price is significantly higher.
Correct.
So this is not a lag benefit. I mean, this will not eventually come later. This is an underlying benefit.
Yeah. This is an underlying benefit, and I think this trend is also because of as I said, at the mine level, the average CV of the coal is much higher, and as a result, the realizations are different, and also different markets around the world offer different premiums to the CV adjusted prices. So therefore, it may not be reflected exactly mirror in the CGPL purchase price.
Sure, sir. Okay. So thirdly, on the coal JVs, particularly KPC, we have seen a significant increase in cost. So effectively what has happened is the realizations have increased, but the costs have also increased. So the EBITDA benefit has not come much. So is this the cost increase again underlying, or is this just was some one-off?
Some of it is due to strip ratio. Compared to last year's strip ratios have increased, as it normally happens when prices go up.
Actually, that is not that strip ratios. We take up such mines which we can afford at that moment. And that's the reason why you will see that at this moment people expose overburden from such of the mines which otherwise don't look to be viable. So when the rates are higher, we always go to mines with adverse strip ratios.
Okay. Sure. And so the last question, if I may, there has been a significant decline in our renewable energies portfolio's finance cost. it is all because of refinancing, and similar to that, the EBITDA in the standalone renewable asset has declined quite sharply on a QoQ basis. So is it because of the seasonal patterns, or this is something, how should we understand that?
No, so the overall finance cost is, yes, you are right, it is purely the full impact of refinancing that has happened.
Okay.
And what was the other question?
The EBITDA part.
The EBITDA part for standalone.
Yeah, for the standalone renewable has declined. So from 170 crores to about 90 crores.
TATA Power renewable, TPREL.
Yeah, TPREL.
So, where is the decline? It's almost same.
So from 170 crores to about 90 crores. Okay, is it because of the other income? Okay, the other income was included. Okay, fine. Okay, I got it. Thank you.
All right.
Thank you. The next question is from the line of Abhishek Puri from Deutsche Bank. Please go ahead.
Yes, good evening, sir.
Good evening, Abhishek.
So a couple of things. One, on the methane power, out of the 97 crores that you mentioned, 77 is for prior period, right?
70.
Yeah.
Is it?
And this is going to be an under recovery on the recurring basis as we are accounting it conservatively now as per the CRC order.
True.
Is that right?
True. Yes, till the time the appeal is up. Yes.
Approximately 20-25 crores would be the annual impact.
So 20-25 crores of loss every quarter.
Yeah. No. Annual
impact. Okay, annual impact. Got it. And secondly, sir, this coal SPV number that you have given in the presentation, on slide number 2, it says, it is accounted on EBITDA as well. And that the EBITDA number there is about 388 crores, and slide number 3, that is about 663 crores. What is the difference between the two?
This is the 663. You said coal company 663, and the other one which you said was?
One was coal companies on slide 3, and on slide number 2, coal SPVs of 388 crores EBITDA.
That coal SPV is Mauritian company.
All SPVs are the holding companies, Abhishek.
Yeah.
Only the holding company.
That's right.
Okay. And what will be the amount of dividends that we are getting?
What you see in coal SPV is dividend.
SPVs, all the increases you see is the actual dividend there.
I'm sorry, I didn't get it.
The increase in SPVs EBITDA is almost entirely dividend.
Entirely dividend. Okay. And lastly, sir, for this Panettone Finvest and Tata Communications, I see a large profit number in the last year same quarter. Any specific reason for the same? Because this company is not usually profit making as such.
So that was more profit booked on the sale of the business of Tata Com last year.
Okay, fair enough. So, and we have already removed that from the numbers in the current quarter. So roughly, what will be the impact if we take Panettone Finvest and Tata Communications for the current quarter? What would be the impact? Because in our estimates, we were considering that already.
Nothing.
Since we don't report that separately, I don't think we can give it, Abhishek.
Okay. And I think a prior participant also asked the same question regarding, the assets that are held for sale. Any numbers that can be shared for the prior periods, not for the current quarter since you have not shared it, but for the prior periods, should help us in terms of, valuing them in a better way.
Okay, so
will it be possible to share that? Can I take it from IR team maybe later?
Yeah. For prior periods. Yeah, we can do that.
Yeah. Thank you so much, sir.
Thank you. The next question is from the line of Bhavin Vithlani from Axis Capital. Please go ahead.
Yeah. Good evening, gentlemen. My first question is if you can help us in the new restructuring, what could be non-core and consequently will be held for sale. Second related question is in the new restructuring, would the captive power plants of Tata Steel be done by IEL as Tata Steel is going for expansion? So should we expect the growth to come to IEL? That's my first question.
So that is something that the company strategy will define, but we see no reason why it should change. for the simple reason that the captive projects in the steel plants, if they are fresh, IEL could be one of the platform to build it. So at this stage, we cannot predict anything beyond that.
And to your first question, all the three assets which are currently under held for sale are incidentally the biggest of the assets we have, apart from the Tata Sons holding.
So if you would appreciate if you can actually, chart out from the current structure of Tata Power, different files like would Tata Projects.
Tata Projects has already been classified. Tata Projects has already been classified this quarter. Tata Com is already classified earlier, and defense business is also already classified as defense. And there is Tata Ceramics, which is a small amount, a small company, that is also classified as defense.
Understand. Yeah, that's helpful. The second question is in the renewables part of in the current quarter, we have actually not given what is the consolidated revenues and EBITDA excluding the intercompany transaction. Would it be possible to share that? This is slide number 11 that
You can check the slide number.
Slide number 11, the consolidated revenue EBITDA PAT is missing.
No, revenue is there.
No, the consolidated excluding the intercompany elimination.
The total is missing. Okay, can you please, I don't think there will be any elimination here on the revenue side. It's simply addition. So that's simply addition on EBITDA also. I don't think there will be any addition. There is no elimination in the quarter.
TPREL holds Valvan, so there is some elimination that happens in the prior quarters that we have observed.
So that's the dividend. That will dividend that will happen at the PAT level. There is also the other income. Yes. Okay. So there is no dividend this quarter. I think last quarter it was there. You are right. These are the YTD figures, so there will be no.
Okay, so we can simply add that and we can get the detail. Yeah, good. So the other question is if you could give us an update on the Arathman because we heard you on the television saying some first tranche has come. So if you can give us a status update and when can we expect the entire amount to be received?
Yeah, so it's coming in trickles right now, and therefore we are not really talking except for the fact that we are still pushing for the larger tranches to come in. At this stage, while the coal prices are higher, the promoters, Bakri brothers, the Bhumi company is still not able to get that because the lenders have the first right on the entire profitability from those companies. So therefore, we are still negotiating with them for larger tranche. Yes, in trickles it started to come in.
So, would it be possible to share the amount received in third quarter and fiscal year to date?
To date, overall, of course, we don't recognize it, but to date, we were including the adjustment of receivables, etc., we would be touching about $100 million.
Okay, so out of the $400 million, a quarter of that has already been received.
Yeah.
Oh, okay. And would it be fair to assume that over the next 18 months, we should be able to get the complete realization?
It is probably crystal gazing at this point of time because we don't know what coal prices would be, what income will go to them, how the lenders will allow them. So there are a lot of issues. I think that suffice to say, as Mr. Sadana said, it is coming in trickles and it will perhaps continue to come in trickles.
Okay. Any time frame that would it be possible to share?
Time frame, only thing we can say is as early as everyone can. Because really speaking, putting a timeline, we also don't like to put a timeline because last 3 years we tried to put a timeline and it was not met. So we would be probably focusing on collecting it rather than putting a timeline.
Sure, fair enough. My last question is on the renewable piece. correct me if I'm wrong, my bulk of the assets under construction has already been commissioned. So if you could help us on the way forward in terms of growth of the renewable portfolio, and by when can we expect that the entire portfolio is consolidated into one entity, and consequently the growth can be accelerated?
So you're right in saying that most of the assets we will get commissioned by March. We've commissioned close to about 247 megawatt this quarter, and I guess the balance close to about 150 to 200 megawatt is under commissioning, which is expected perhaps in the subsequent quarter. And beyond that, the assets, etc. Right now, the bidding is on, and after that, we will be able to tell you what exactly is the future plan.
Any possibility that if you could share your view where we see the current tariffs of solar, do you believe they are attractive enough, or that's one of the reasons why that you are actually going slow on the expansion?
Yeah, you are. I mean, let's not talk too much about those who bid and won, because it is their perspective. But the fact of the matter is that yes, these tariffs do appear to be a bit on the lower side, and one will have to therefore make sure that one picks up the right opportunity.
Okay, so would, in your opinion, these be unviable tariffs?
I don't want to say it for those who have won it.
I think it's difficult to say that because it so much depends on the individual appetite of some of the investors. And to say that it is unviable for all could be a statement without information. We would rather refrain from making comments on the others' ability to get low tariffs.
And also, I think if you want to really get a bit deeper, all depends on who scope the land and interconnections is. Somewhere the connectivity is provided as a part of that, somewhere the land is provided as a part of the solar park, etc. And so this is one factor. The other is, for each player, the capital cost is different, because as you can understand that there are wide-ranging players with different perspectives. So it matters to different players. It will be a different perspective altogether, and some may say that look, it's absolutely fine with us, it's viable for us. So let's not make that kind of a comment that these are unviable. We can say yes, it's challenging to work on the current tariffs, and one is hopeful that the tariffs will either course correct or the material cost will course correct, because one factor that you must bear in mind is that suddenly in the last 6 months there was an increase in the module prices.
Just a last bit which I had asked, when do we expect the whole renewable entity to be consolidated into one entity?
15th of February we are having a special shareholders meet, and after that we will report that to NCLT, and then the process should take its own time.
Just to clarify, the current that petition which we have in NCLT is only the 370 odd megawatt of wind assets in the standalone. If you are talking about single entity for the entire portfolio, it's still going to be housed within the umbrella of TPRA, but not one entity. There are maybe 25 entities which are there, and they won't be easily collapsible if you are asking that question. But they will be under one parent as a holdco, so to speak, which is TATA Power.
Okay. Yeah. Thank you so much for taking my questions.
Thank you. The next question is from the line of Ashish Shah from Goldman Sachs. Please go ahead.
So thanks for taking my question again. Sir, we had classified around 16% of the entire stake which we own in Tata Communication as held for sale. Now we see that the Penton holding has been sold to Tata Sons. What about the remaining 4% that we directly own in Tata Communication? How do we think about that?
But I think there's some confusion. We haven't sold yet.
Yeah, I mean, in the sense we have,
We only classified the assets into held for sale. It's just an accounting classification in the balance sheet. So sale is yet to happen, and whenever it happens, of course we'll announce it.
Okay, because we had this BSE filing which said that we are considering transferring the Peloton stake to Tata Sons. So I was just thinking, what about the remaining 4% that we directly own?
Okay, good question. So that notice is specific to Peloton because that is a requirement of the non-banking NBFC regulations. So that doesn't apply to the market share. Therefore, the notice did not talk about the direct holding. But both go hand in hand.
Okay, makes sense. Sir, and if I just had to look at the company, I mean, in the sense we are trying to, offload the non-core assets, and once we are able to do that, how do we plan to grow? In the sense, do we plan to grow via, say, acquiring thermal assets through the JV with ICICI, or do we plan to expand the renewable portfolio? How should we look at it after this divestment?
So I can only give you a general response to this question because we don't want to be giving any guidance for future. And the general response would be yes, it will be both of those, which you mentioned, which is grow through acquisition of some of the stress assets, as you mentioned, and that's the reason why the platform is active. And of course also grow in other options, which is through renewables, through transmission assets, T&D assets, rather there are distribution assets also which are being talked about, and any other opportunity that might come in. So one will be open to all.
Okay. Sir, and the last thing is, can you throw some light on the Ajmer distribution asset? I mean, what's the progress? Because we had heard that.
This is just about a quarter that we've gone through that. We can only tell you that the distribution losses are showing up improvement. It's too early to talk about that in terms of exact numbers. The service parameters have started to improve. Again, too early to talk. We have to make sure that we do preparation for the coming summer because that will be the test, and work is on towards that part. So the team is in place and the work is underway.
Okay. Thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Sumit Kishore from JP Morgan. Please go ahead.
Good evening, sir. My first question is in relation to Arutmin, where you mentioned that close to about $100 million has come into the company. So is it already reflected in your net debt position as of December?
No. The cash is
where is that cash parked, and why has it not been taken through the P&L?
To the extent it is received in cash, it is of course reflected in cash in the consolidation, but there is non-cash adjustment also. So that of course adjustment will happen only when the transaction closes. What we are saying is that 300 is the balance cash to be received.
Okay, so $100 million of cash is in your consolidated balance sheet and is reflected in your net debt.
30 million is in the form of cash. Balance is actually receivables adjustment because there were some receivables also. So therefore there were loans also which were to be adjusted. That has been done. So therefore that won't appear naturally in the cash, and that adjustment has not formally happened because that will happen when the transaction fully closes, which means that the amounts are fully in. What we are saying is we are in terms of securing the 400 million, 400 million is already secured.
Of the 100 million secured, only $30 million is in your cash, in your recognized in your books.
Yes.
Okay. The second question is, in your notes to accounts, you mentioned that the company expects to realize value from the sale of Tata Ceramics and Tata Projects in excess of the carrying value of the investment in the said entities. So, just to set the reference point right, what is the carrying value that we are looking at for Tata Ceramics and Tata Projects?
That we can separately
send it to you. I think it will be appearing in the standalone books. So in the balance sheet it will be there, but anyway we'll give you the value if you want. Our team will give you.
Okay. And since these transactions, especially for SED and even Tata projects, will be intergroup in nature, so should we look at the reference valuations of companies in the sector as listed on the exchanges? For example, Bharat Electronics for SED as a possible comparable on a trailing 4-quarter EV EBITDA valuation as the right reference points, or would these be sub the market valuations?
Look, the Companies Act and the SEBI regulations are very clearly mandating that in a related party transaction goes through a fair valuation process. Now you know that standard fair valuation processes include references to market as well as references to DCF method, right, and references to multiples. So therefore, depending on the independent valuer's judgment, appropriate metrics would be used to value this. Now, so therefore the answer lies in the fact that there is no one reference point that you can take. Generally, valuers take a mix of these. And we would be doing a fair valuation based by reputed independent valuers.
Okay. And finally, so on Trombay, the understanding is that for 1 year, nothing would change. And so basically the whole process of entering into a negotiated tariff would just get pushed back by a year.
Hopefully, yes.
We have
to wait for the MERC order.
We haven't received the order yet.
But that would be the best case outcome.
Yes. That's what BST has pleaded for, and we have seconded, but one can wait. It's better to wait for MERC order, but see as to what they have to say.
Sure. And finally, there has been a noticeable reduction in your interest cost on a quarterly basis, both on a quarter-on-quarter basis as well. We're seeing the net debt to equity ratio reduced to about 2.76x now. So what is the direction? I mean, I know your target is normative levels, but what timeline do you see achieving that normative level of say 2.33, 70/30?
Well, suffice to say that the indication that you're getting about the assets held for sale is really setting the direction. Timing would depend on the time that is required to actually materialize them. So I think that's the correct way to probably describe it. So directionally that's where we are going.
Sure. Wish you all the best. Thanks.
Thank you.
Thank you. The next question is from the line of Rahul Modi from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. So most of the questions have been answered. Just a couple of them left from my side. So some details, if you could share on the Russian mine and the investment and timelines on that, please.
I'm glad that you remembered the Russian mine transaction that happened so recently. So the mine has the potential to provide coal of very good quality to our projects. It will mean that we should be able to bring the coal to Mundra as well. And it has 380 million tons of reserves. And therefore, for the quantity that we are looking for, we will assume that it will service at least for the balance part of the PP. We can ramp up the mine in about, it could start in about 18 to 24 months from now, depending on the progress of various aspects. And from there on, it can ramp up to about 10 million tons per year, which is based on the mining plan that's been worked at the preliminary stage. And so that period will be another 24 months. So you can say 24 months you start with close to about 5 million tons, ramp it up to 7.5 in about 8 to 12 months time, and then to 10 million tons in 24 months time. In terms of various aspects related to the mine, I can only add by saying whatever were our learnings from Indonesia, we have made sure that those learnings are documented, and wherever need was, even we have got the stamp of approval of the highest authority in that land. So made sure that the grandfathering of the existing norms of taxation, existing norms of transfer pricing, as also concepts of making sure that no change of law in that soil will impact this particular asset and there will be a carve-out available to it. All of that has been done. So we are targeting to make sure that we should be able to get the coal from this in 18 to 24 months time from now.
Sure. Sir, just one more thing on this. Sir, I believe we would be tying up with a local MDO contractor in this.
Those are models of how you want to extract coal. So there could be MDO model, there could be model of where you have a local contractor but we buy the equipment. So depending on which turns out to be cost competitive and risk-free, we will pursue that option.
So, any Capex guidance, and will we be incurring the Capex or?
I mentioned to you that depending on the model that we adapt, we will have to then take a call on that part. We have done our estimations based on both models. One where the investment comes along with the equipment from a contractor, and where a contractor just does the normal contract mining and we bring the equipment from our side. So we have looked at both the models. Now, depending on how we eventually get the offers, we will finally decide.
Sir, just wanted to check on the infrastructure. Obviously, it's at a very nascent stage. So, but how far is it from the port there, and any infrastructure which is already existing?
So, yes, there are mines in the areas around. There are refineries in the area around, and this mine is about 60-kilometer motorable road from the coastline. And the way the scheme will work is that there would be a state-sponsored arrangement for coal jetty as also for the transportation from mine to the coal jetty.
Okay. And so just a ballpark number in terms of what kind of savings you're looking at, from this, even on a minimum scale, if you can give us, and what will be the GCV like?
It's really unfair to talk about financial figures for the forward period. I would say, yes, the coal will be of very high quality, and it will be upwards of 6,000 kilocalories.
Okay, fair enough. So just one last on Mundra. So the tariff is at around 2.69. Any prior period in this?
No, there's no prior period, but you would. There is benefits are currently coming from the swaps which we have taken, the interest rate unwinding of swaps. That is one thing we're looking for, where the PAT is coming down, and there is dividend from the Singapore subsidiary that stands has been one off for us in this quarter, 25 crores. And lower, generally the interest cost by and large is the same as last year.
Right.
But I think that's important. I think the more important, as Mr. Rana earlier explained, that the lower the sale.
No, Ramesh is more keen to understand the jump compared to the previous year on the revenue side, which is basically based on the coal cost that the regulator has regularized based on the high coal cost. Because when you're looking at Q3 figure, it could correspondingly be for something like $50-60 when the price was, and this figure that you see 269, the regulator may have updated it for about $100. So that would have been one of the key change.
Okay. Fair enough, sir. Thank you so much and all the best.
Thank you. The next question from the line of Anirudh Gangadhar from Nomura. Please go ahead.
Thank you and good evening. Sir, my first question is on the continuation with the realization of Mundra. From the narrative that we've got, given that CERC's new escalation rates are in a negative territory, could you explain why the realization is up quarter on quarter from 2.59 to 2.69? Because what we understood was that progressively the number should be heading down as far as the CERC escalation factor is concerned.
No. There are two factors in this. If you see the figures, as you said, 2.59 to 2.69, one is of course the coal component, the cost that has changed. The other part is there was a change of law order on the fixed price, where again the CRC gave a final order, and I think that would have been one of the constituents in this part also. Maybe that was just for 3-4 paisa that I remember.
I see. So that would be a full retrospective impact would have been taken.
I'm not sure how much is the retrospective part, whether that has been averaged or it is whole component plus that which is going to be recurring time.
I see. And the next question was on the interest and finance cost for Mundra, down from 156 crores to about 120 crores. Is that again purely refinancing or anything else, or swaps have given us a lot of gains?
I think it's the latter. The swaps have given the rate, and the MTM also has come down.
Swaps and MTM. And the third is the clarification, just when you mentioned that at least in my numbers I was expecting a lot more contribution from the coal companies, but as you mentioned that they chose to operate those mines which become viable at the current high prices. So fair to say that these kind of margins and spreads can really be sustained even if prices go down, because then we can move back to mines which are viable and similarly profitable at those price levels.
Yeah, but you remember when the prices were getting lower, and we always used to say wait for a quarter and we will move to mines with better strip ratio. So it's a natural process. It's a process in which you keep identifying and keep doing borehole data and keep yourself ready as a part of the mining plan.
I see. So the next question was on a share of associates. The profit after tax, the contribution is up to 33 crores this quarter, up from about 9 crores that we saw in the second quarter and 9 crore in the first quarter. What has led to this delta, sir?
So two of the assets, it's given the chart which has been given to you, right? It is given to them. So chart number 3 says, the assets there, Sanatone, Invest, TATA Projects, TATA Com, they've all moved into the held for sale category, and therefore they will not be there in this quarter.
Sir, my query was not on year. I totally appreciate what you're saying in terms of assets held for sale. It was more on quarter. That last quarter, the share of associates contribution was 9 crores only. It is now 33 crores.
I don't see a figure of 9 crores. Where are you seeing? Last quarter.
Quarter on quarter.
Okay. So we'll just take that number.
Right, sir.
Okay, we'll give you that number. I'm sure it is because the Tata project which is appearing there must have been lower. Last year project was still there. Must have been a lower number. So we'll take the last quarter and tell you.
And sir, my final question was in terms of any confirmed bids that we have done via Resurgent for any of the stress assets, and also what's the status of our Georgia project?
We have been participating in various opportunities from Resurgent side. Right now we won't be able to. I think it's been coming in the newspaper also. So yes, the answer is we have done that, and we're waiting for further progress on that part. And you asked about the Georgia project. The Georgia project at this stage is, you can say, is in a bit of recuperation exercise. We have had part of the tunnel where the rock has swelled and come down into the tunnel. So we have evacuated the tunnel, and right now we are doing the studies to see as to what should be our next section to recuperate the tunnel. So we will be able to advise you details of that once we are clear in terms of what's been the finding of these studies.
And your previous question on this share of joint ventures is correct. The Tata Projects profit was just 10 crores in the Q2. So that is why that was low in the last quarter.
Right. And sir, if I may just slip one question on Russia, you mentioned that 18 to 24 months would be the ramp-up timeline from now. By when should we expect the decision on the model that you're going to use there be decided? In another couple of quarters?
So two things I think I need to clarify. I said 18 to 24 months we should be able to start the mine. And I said another 24 months for it to ramp up to 10 million tons per annum. Now your other part was when would the model be ready in the sense of deciding the model for contractors? Are you saying that?
Yes, sir. I mean MDO or ourselves. Just on the answer on the capex that I understand.
Should be there before the start of the mine. So if the start timing is about 18 months, that will be ready before that.
Okay. Right.
And before you sign off, you had asked me about this 2.69. So we just checked that part. It does not have any component on account of CRC order. It's just the indexation on account of the coal prices.
Okay. Okay. Thank you very much. Thank you so much.
Thank you. The next question from the line of Bhargav Buddhade from Ambit Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. I have just one question. So on this renewable carving out of assets into one umbrella company, TPREL, what would be the rationale for doing this? Can we possibly expect an IPO of this particular entity or a fundraise in this particular entity through a private placement?
You see, the first is that when we decided to set up this Tata Power Renewable Energy, at that time the decision was that for all purposes of growing this business, we need to have a common management, common infrastructure, and common reporting. So it started from there. So at that time, we already had some assets in standalone. So it's just an exercise to now put the old assets back into this new company. And the vehicle still remains the TPREL vehicle. So a rationale for this carve-out is just that, there's no point in having assets all over the place. That's all. And it helps them the management to keep good oversight, reporting, MIS, operations, a lot of things can be optimized.
Well, the reason, sir, I am asking is because if you go to the shareholder notice for the 19th Feb board meeting, which is called, in the rationale, it's clearly mentioned that it's basically also benchmarking of valuations. So possibly there could be an IPO or a private placement. So how seriously we should look at that rationale? I mean, that was the
in a petition, you have to put all possibilities that are there by doing this. Advantages are there. I mean, nobody can deny that one could do that. But if you are asking,
I wouldn't say anything beyond that.
So what we would normally, right at this point, there's no plan. If your question is that are we planning to monetize it immediately, etc., at this point, no.
Okay, sir. That's it. And thanks a lot for answering.
Okay.
Thank you. The next question is from the line of Girish Achipalia from Morgan Stanley. Please go ahead.
Sir, thanks for the opportunity. Just a couple of questions. On the safeguard duty bit, that has made headlines earlier this month. Just wanted to understand your tidbits as to how you think about it, particularly for our operational assets. And in that same context, if you could just probably put in context the solar manufacturing order book, how are we seeing the ramp up there currently?
First part that you're saying, for the operational assets, it doesn't really make a difference because the safeguard duty will be only to the extent that you will import the spare parts or you will import the modules going forward. For the newer projects, yes, it would make a difference because then you have to have for all the imported panels, you will have to pay that extra duty. Now, since the matter is sub judice, as you know that Chennai court, Tamil Nadu court had actually stayed any decision in this respect. So therefore, I don't want to say anything beyond the fact that what should be the view. Let's wait for the court decision to come. As far as the order book is concerned, I think we will share those details separately with you. Our IR team will give you those details. We don't have readily that figure.
Also, sir, just a bookkeeping question, and sorry if I missed this. The debt is down by about 1,100 crores sequentially, and you did mention that you received $30 million from Arutmin, which I presume is still in cash, etc. So, largely the debt reduction has happened because of operational cash flow. Is that right?
Yes. Okay. And the reclassification of the defense business would also have taken away the debt, the small amount of debt in there. I guess that's the answer. And some amount of course, repayments keep happening. We have some accruals from the current year would have resulted in lowering of debt. So a mixture of these things.
Okay. And if I look at the consolidated interest cost, if you can just help, what could be the forex gain, if any, for the quarter?
The forex gain, we will come back to the main forex gain is in CGPL. Okay.
Understood, sir.
We'll give you that number. Collectively, there could be a few other places also.
Understood, sir. Thank you.
Thank you. The next question is from the line of Dhruv Muchal from Motilal Oswal Securities. Please go ahead.
So my questions, thank you, sir. My questions have been answered. Thanks a lot. And Mr. Sadana, thanks a lot to you, and all the best.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. So a couple of clarifications. So we are transferring all our wind asset or renewable assets from the standalone to the TPREL level. Is it correct that are you moving the entire 476 megawatt into various subsidiaries and TPREL, or is the number is 380 megawatt? Because what I see in the restructuring scheme, the number adds up to 380 megawatt. By the slide, it is 476 megawatt.
Just 1 minute.
Does it include the This is why wind assets. We'll check this number. You're right in saying that actually figure is 380. We'll check this and come back to you. Just check this. Why is this 476?
So the other question regarding Russian mines, is there any transfer pricing mechanism which has been identified at this point of time, or is it all, it is not decided as of now?
No, there are estimates internally that we have done, basis which we have bid for that mine. We have to validate that now based on the additional boreholes that we are doing and the mining plan that we are preparing at this stage.
No, sorry, I'm asking, is it a cost plus mechanism or is it a benchmark pricing,
No, we can follow any of those. I'm saying as long as it's cost competitive, whether we want to stack it at the mine end or we want to do it at the other end, we will have to decide all of that once we are clear with the price.
Yeah, if your question is that is it compulsory to sell at market price in Russia, the answer is no.
No, that's what I started saying, that whatever we learned from Indonesia, we made sure that we have clearly provided for those in the agreement.
So last question, ITPC is Zambia. So the EBITDA has been very volatile compared to last year's same quarter. It was 6 crore or something odd, which has risen to 83 crore.
Yeah. Okay, that is more to do with the way the accounts were translated here. Last year was accounts, the functional accounts were in the local currency and we used to convert it into dollars to reflect in the TATA Power console, and therefore the exchange gain, which is called translation gain, were the main reason actually. That's where you see the volatility. This year onwards, we got the permission to report it in dollars.
So what can we expect is sustainable EBITDA for the ITPC for the entire year?
The current quarter has certain element which is higher. Going forward, probably to remain at that level or slightly lower.
Okay, so thank you, sir.
Thank you. The next question is from the line of Mohit Pandey from Citigroup. Please go ahead.
Yeah, good evening, sir. So just one question. For the coal logistics companies, if you could please share the revenue, EBITDA and PAT for this quarter and same quarter last year, that would be.
We'll just give you separately. You want a coal logistics company?
Yes, sir.
Yeah, okay. We'll give you separately.
Okay, sure, sir. Thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Sumit Kishore from JP Morgan. Please go ahead.
So just one bookkeeping question. Of the consolidated debt of 479 billion, what was the reduction quarter-on-quarter because of businesses being declared as held for sale? So was there debt element related to SED which is no longer getting consolidated?
No, so due to reclassification, the amount is not much, just about 200 crores, I'm told. The others are really from the dividend that we received, the SPV debt has come down.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
So thank you, friends. Incidentally, I just wanted to make my last remarks and thank each one of you. This is going to be my last conference call with the analyst community because I will move out from Tata Power on 30th April. And incidentally, the accounts board meeting is on 2nd May. So I would just miss that by a few days. But let me take this opportunity to thank each one of you. Your inputs, your questions, your suggestions were always very useful, and your candid feedback in many occasions when we had interactions really helped us to get our acts together and make sure that we dovetailed that in our decision making. So thanks from bottom of my heart. Thank you to each one of you, and I'm sure wherever I am, we will have the opportunities to cross roads again. So once again, thanking each one of you, and also to the IR team here. Thank you so much for all your support, your alignment, and look forward to being in touch. So once again, thanks a lot.